Okay, I think we might as well get going. First of all, thanks for joining us today. My name is Adam. I'm the marketing director here at Founder Shield. Today we have Justin, a senior account executive here at Founder Shield, and Michael Cohen, who's the CEO and founder of Suitless. I'll let them introduce themselves in just a moment. I'm going to be sort of running things behind the scenes here for this webinar. We put this together with relatively short notice. As I'm sure you're aware, the situation is changing rapidly. So the goal of this webinar is to provide you with the most up-to-date information as it relates to HR, finance, insurance, and hopefully put you in a better position with your continuity strategy at this time. In terms of the format, Justin and Michael each have a presentation prepared. And then we'll also have time for Q&A at the end. So there's a Q&A function in Zoom. So if you have any questions that come up, feel free to just put them in there. Just put a reference of who you want to ask in it, and I'll make sure that it gets to them. And also, like at the end of the webinar, we're going to be sending out just a short survey, which is purely for feedback on the webinar itself. This is our first one, so any feedback would be much appreciated. It's also anonymous, so don't have to hold back there. And for each response to the survey, both Founder Shield and Suitless will be donating $5 to New York Presbyterian, a hospital here in New York City. Anyways, that's enough of me talking. I'll hand you over to Justin if you want to introduce yourself and tell everyone a bit about what you're going to cover today.
Yeah, absolutely. Thanks, Adam. As Adam said, I'm Justin Kozak. I'm a senior account executive here at Founder Shield. Founder Shield is a full-service insurance brokerage. We focus on earlier stage venture-backed companies and emerging industries. Many clients and prospects that we're working with have had a lot of questions around how regulators and insurers are responding to COVID-19, how we can interpret insurance coverage, and frankly, what they should be doing and staying on top of. So my goal today is to just provide some insight, recommendations around the insurance climate right now with COVID-19. Mike, I'll throw it to you.
Great, thanks, Justin. My name is Michael Cohen. I'm founder and CEO of Suitless Inc. We are a technology-enabled consulting firm that helps small to medium-sized, fast-growth businesses. We help companies with their back office, so everything from finance and HR and internal operations. We've started in 2015 as a virtual company, so we have a little bit of a jump in terms of being a remote organization and figuring all this stuff out prior to the current situation that we're all experiencing. So I'm going to jump into finance and operations and HR. I just want to preface all of this with a disclaimer that I'm not a lawyer and I'm not a certified public accountant, and to always check with those folks before you do anything. But my goal here is to try to provide some tips and tricks for you from an operational standpoint. We're all living in a new world, a new environment. So I've tried to compile as much information as possible for you so that you can operate in the current coronavirus universe. So started with finance and realized that a lot of companies are in a tough spot when it comes to finance, when it comes to where they stand, where their cash is at, where their bank balance is at, what their receivables are, what their payables are. So we've put together 5 areas of immediate review that we want folks to take a look at. We're going to start with, and these are areas that when we work with companies, there are areas that may have some holes or some leaks in the boat there that you can shore up immediately in terms of cutting costs. So the first one is going to be travel. We know that for the most part, folks aren't going to be traveling. So taking care of that T&E budget, cutting it down, communicating that to folks, letting them know that, whether you're cutting it in half or cutting it entirely. Some folks have mandatory travel for their employees, but we're telling folks to take a really hard look at that travel budget. Also, transit is another one. So if you can turn off any sort of ongoing transit costs that you're paying for employees, that's a good one to take a real hard look at. Next is rent. So rent is a really big expense for a lot of folks, and we're not telling anyone to stop paying their rent or figuring out ways to avoid paying rent. But sometimes if you talk to your landlord or whoever you're leasing from, and they may be able to work out some sort of flexibility. Another area is parking. We're seeing a lot of folks getting rid of parking right now because they just don't have employees commuting to the office. So that's another area that you may be able to tweak. And meals as well is another area that you should be able to cut down on in terms of meals expenses. And lastly, subscriptions. Check out what subscriptions you have. Some of our folks that we're working with have gym memberships or ongoing snack services being delivered to the office. So anything that you can cut down on there, even transitioning some subscriptions from monthly to yearly, like even a Zoom membership might be beneficial from a cost standpoint. Next thing we're telling folks to think about is shifting ad spend and marketing to online, right? So if you have physical ad spend, if you're able to cut that, move that to online, move that to any sort of social media advertising, might be a good time to start thinking about that or coming up with a plan for that. And next, we're saying careful with headcount reduction if you're going to be applying for the PPP. We're going to talk about the Paycheck Protection Program in a little bit, but that's the main one of the main forgivable loan options that's going to become available to small to medium-sized businesses. So we'll talk about that in a little bit. But careful if you're going to be laying people off or furloughing or terminating or whatever you're doing. You just want to make sure that you're not going to put yourself in a disadvantage when it comes to applying for the PPP. And then lastly, putting together an overall financial strategy for what's happening. We're telling the people that we work with to come up with multiple scenarios. What if this lasts 3 months or 6 months or hopefully not longer, but having those scenarios in place from a income and expense perspective is going to be helpful, because we really are in an environment now where we don't know what's going to happen. We don't know who's going to remain essential workers or essential businesses versus who isn't, what sort of things may change in the future. And being able to model that is going to give some peace of mind, but also give a little bit of a roadmap depending on what unfolds over the next 3, 6, 9 months. So next I'm going to talk a little bit about funding opportunities. And one of the things that we're recommending to folks is really having your ducks in a row when it comes to documentation. Being able to operate quickly and apply for things quickly is really going to be the name of the game here. A lot of these things have hard deadlines in terms of loans and grants. They have hard deadlines. They're first come, first served. There's mad scramble. And we're seeing the concern from our clients and the people we work with about wanting to make sure that they get access to this, this financial opportunity. And so we're saying start by making sure you have everything accessible, readily available at your fingertips. So we're going to start by talking a little bit about government relief and what's out there. There's some of you may know there's 2 key stimulus packages that were signed into law: the FFCRA and the CARES. The FFCRA is the Family First Coronavirus Response Act, and CARES is the Coronavirus Aid, Relief, and Economic Security Act. So the second one, CARES, is what I was talking about earlier with the PPP, the Paycheck Protection Program. And that's going to be through an SBA lender, so someone that is SBA, that can lend SBA 7A loans. And there are already some sample applications that are available out there. And that window to apply for the PPP opens up tomorrow, April 3rd. And so you're going to be able to take loans out up to, and I think the total amount is $10 million, but in terms of the forgivable amount, that's about 2.5 times your monthly spend in terms of payroll. So you're looking at also being able to use that for things like rent, utilities, mortgage interest, anything related to employing folks. So you can also fold the benefits portion, health insurance and that sort of thing, into the loan request. One of the things we're recommending to folks is that they again, make sure they have all of their ducks in a row, their documentation. We're starting to do this by gathering up previous tax returns, previous 941s, which are quarterly payroll reports, payroll journals, 2019 financials, so that when it's time to pull the trigger on these loan applications, that folks are able to do that. And so one of the things that we're also recommending is there's a hierarchy here in terms of getting this funding, and that is first and foremost, we want to look at grants that are out there, whether they are public or private grants. A lot of states, even some cities, are doing grants, and that's usually free money. Then we're going to look at forgivable loans, so loans that are made to you or your company in exchange for you doing certain things, making sure you maintain headcount or making sure you maintain business operations or business continuity, whatever it is. And then the third level down is the actual loans themselves. And right now, with interest rates relatively low and SBA rates low, that's kind of the pecking order of how you want to look for money for your business. And then next up, there's some private relief that's out there. Two of those options that I'm highlighting right now are Facebook grants. So some of those Facebook grants are being made in terms of cash, and then some are being made in terms of ad dollars that are being made available. And then Amazon has some grants as well for they have a neighborhood small business grant. So if you have a storefront, you're able to pursue some of that. And then next up, we have just some I don't want to call them funding opportunities, but in terms of individuals, these new laws have enacted a lot more flexibility around what you and your employees are able to do. There's 401k hardship loans and loan distributions that are specifically available for folks that are affected by COVID-19. There's increases to unemployment. There's increases and changes. Folks have talked about this stimulus check that should be arriving maybe next week, maybe the following. And so there's a lot of money floating around out in the environment based on these recent laws. And then lastly, we have an other section here, which is kind of what some of these companies, lenders are doing on a private basis. Some student loan relief, and also some mortgage forbearance. We're finding that a lot of companies out there, banks, are actually allowing the folks that have mortgages to put a hold on their mortgage payments for 1, 2, 3 months. So again, a lot of resources out there that we hope folks are taking advantage of and becoming aware of. So on the HR front, I'm breaking this down into compliance with new laws, compliance with old laws, general HR matters, and some other stuff. So we're going to start with compliance with new laws, specifically around this new FFCRA that we spoke about earlier. And there's some posting requirements that you want to make sure you're doing. The DOL has issued, the Department of Labor has issued a poster that you can provide to employees. There's also emergency paid leave that has been enacted as part of the new FFCRA. And in addition to that, there's some administrative requirements that we're encouraging folks to be up to speed on. In addition to that, there's an expansion of the FMLA portion of the Family Medical Leave Act that's part of this new FFCRA as well. So questions around HR matters. We're kind of over the hump with HR matters right now in terms of in-person. We're not seeing as much of that. So when the pandemic first started unfolding and when it first began, we started getting a lot of questions in about, can I send my employee home if they look sick, or can I take my employee's temperature, or what do I do? How do I manage sick leave? So again, without this being legal advice, what we're saying to folks is, yes, do these things. Maintain the safety of your employees. Maintain the safety of your workforce. All of those things are important. This is a critical environment right now where companies want to maintain their viability. And so if that means taking your employee's temperature or sending home someone that's sick, you absolutely do that in order to keep everyone safe and healthy and happy. And I always say you can settle things out after, once the dust settles, you can work through these things, but use a lot of good common sense first. And you don't always have to go to the, blow up the dusty book and say like, am I allowed to do this? If it makes sense, let's keep people safe. Let's keep people healthy. Let's do the right thing. We find ourselves telling folks that over and over again. And then once it does get into the nitty gritty, then we sort that out, after we sort of deal with the initial issue or trauma. Policies and procedures. Now is a great time to put an employee handbook into place, believe it or not. All of the stuff that happens in the workplace can happen remotely as well. So I'm talking about people, not being productive, saying the wrong things, saying strange things, any sort of discrimination or harassment or anything that can happen in a workplace can happen online. And chances are you're probably going to have less, as a business owner, as an employee or a manager, you're going to have less visibility when it's happening online. People are not kind to each other, or they're treating each other unfairly. And so having policies and procedures written down somewhere, whether it's online in a Google Doc or on a Trello board or whatever it is, it makes sense to have that now, even more so than ever. And then compliance with existing laws. We do still want to use all of these laws as a baseline, right? Like the Fair Labor Standards Act and the Family Medical Leave Act, if applicable. COBRA, which is insurance continuation, and OSHA too. Just beware of those laws. I would say, again, use them as a baseline. If you're going to be tweaking them or you're no longer subject to them based on your size, I would refer you to counsel and talk to your employment attorneys and figure out how you're going to weave some new things into what you're doing. And then lastly, these are the questions that we tend to get the most of, unfortunately. Questions about layoffs, reorganizations, restructuring. We're just telling folks here, look, you have to keep your business up and running. You have to do what you have to do. There are all sorts of creative ways when it comes to employment. You have to remember that your employees, they have different goals and interests now too. They're working from home full-time, they have family members or people living in their house or children. And so just as the company's goals and interests shift, so do individuals. And sometimes people may want to work less, or they're able to take a pay cut for a short time, or they're able to be furloughed. So we're saying have good questions and have your managers have good questions with your employees to determine what they're after, because in a changed environment like this, it used to be like changing someone's compensation or changing when they work or how they work used to be, not a great conversation. And nowadays, it's okay to have these conversations with the goal of figuring things out, together as a team. So I want to thank everyone for that portion. I'm going to wind down now. I hope to see you all in the Q&A section. I'm going to hand this thing off to Justin, and he's going to do all the insurance stuff. And thank you for listening.
Thanks, Mike. Thank you everybody for coming as well. First and foremost, hope everybody's staying safe, diligent. It's a scary time. Hopefully we can provide some insight to help on the business side of things and understand the insurance climate right now. But again, hope everybody is staying safe. As a reminder, we'll be going over how state regulators and insurers are responding to COVID-19. We'll get a little bit into interpretation of insurance coverage, as important, questions to be asking your broker. To start, the most common question we're seeing right now is, especially in light of the stimulus packages, how is insurers helping insurance coverage? First and foremost, the main question around that is business interruption. I'm losing income. I can't run my business at full capacity. Certain states are trying to address this. New Jersey, Massachusetts, and Ohio are prime examples where they're trying to pass legislation to essentially force the hand of insurers to pay claims due to lost income. Now, the way that this would work is that there's something called admitted paper in insurance. To be admitted, you need to file your forms with the government and they need to approve it. So what governments in states like New Jersey, Massachusetts, and Ohio are doing is that they're trying to kind of retroactively make insurers change their insurance form to pick up claims related to lost income and COVID-19. Right now, nothing has passed. I expect other states to follow suit with New Jersey, Massachusetts, and Ohio. And what they're essentially trying to do is negate a virus exclusion on that type of coverage. So regulators are thinking about it. They're trying to pass it. Nothing has happened yet. I think that it'll be a day-to-day thing to see how updates come from state to state. Something to definitely stay on top of. Now, other insurance providers such as ISO are preparing for this. They're an insurance advisory organization, meaning that they actually provide insurance forms for hundreds of different insurance companies to use. They've already manuscripted what endorsements would look like if this legislation were to pass and COVID-19 related business income losses were to be covered based on regulators forcing the hand of insurers. So everybody on multiple sides of things are thinking about this, are preparing for it. We'll get a little bit into how insurers are responding to it right now, at least before this legislation is passed, if it's passed. But it's something that people are preparing for and we need to monitor. The next biggest question is, I do have insurance right now. I'm having a loss of income, a downturn in business. How can I pay for this? Is anybody helping me? That there has been a lot more progress on. The Department of Financial Services in various states are putting certain guidelines in place to make insurers comply with what they think is going to be, fair and fair treatment in terms of payment guidelines, grace periods, that sort of thing. A few examples: Alaska is prohibiting insurers from canceling insurance coverage for non-payment. California has enacted a 60-day grace period for all policyholders to pay premiums. New York has put a lot of regulation in place, making insurers just on a high level offer payment accommodations as necessary, extending due dates on payment, waiving late and reinstatement fees. Washington State is forbidding cancellation due to non-payment until May 9th. So there's different regulations per state. Again, something to stay on top of. It's hard to kind of come with a high level overview of how this might apply to you. I'll get into a little bit later of some resources that will be helpful in kind of staying on top of this thing. It'll become a theme throughout this, but my recommendation is always talk to your insurance broker, ask them questions about the policy, about what's going on in your state. Moving on to carriers. Carriers are responding to this. While they're not paying claims, they don't think they have to yet, and we'll see how that legislation goes. They are replying to the state regulations around payment. Hartford and CNA are two prime examples of that. They're very large insurance companies that deal with a lot of small to medium-sized businesses. It's very common to have a policy with one of those insurers if you fall into that boat. They're already implementing guidelines as set forth by New York and other states, waiving late fees until June 1st, preventing cancellation for non-payment. So they are getting on board. They're not pushing back in terms of the payment relief side of things. In terms of the coverage side of things, we believe that they're getting ready for this legislation to potentially pass. They're offering what I'll call softer declinations of claims. So if you're filing a claim for business interruption insurance, lost income, again, they have that virus exclusion on policies for that. And usually the coverage is tied to a physical loss of your property, right? There's a fire to my building, that sort of thing. And we'll get a little bit more into those details later. But carriers right now are denying those claims, but with softer language, kind of indicating that they're preparing if regulators start to try and force their hand. Again, like I said, there is a lot of different regulation based on what state you're in. So it's important to stay up to date on that. There are some good resources. The first one seems very simple, but honestly, this will work. most states have information online about what they're doing in terms of insurance regulation and what they're trying to pass. If you simply Google your state and then DOI COVID, DOI stands for Department of Insurance, it's likely that if your state has a page up on a website or has created a new website, you'll likely find it that way. That will give you specific information about your state. We've also been working with Sidley. They are a reliable law firm. We've posted a lot of their information in our blog posts citing them. They've stayed very up to date on specific state regulation in the insurance front, so I recommend them as a reliable source. They have been updating things pretty frequently on their site. They have a COVID section there, so check them out if you're interested in specifically what your state is doing. It's possible they have a pretty good update for you. We'll be trying to do the same on our blog posts as well, and we can send some information after the webinar. Moving on to specifically insurance coverage. Now, it's likely that a lot of businesses have insurance coverage already in place, whether you're risk averse, whether you have contractual requirements to do so. There's a few specific coverages where we have received a lot of questions on. The first would be more coverage in relation to employees, right? So first and foremost, employees are getting sick. Some business owners are a little bit concerned that, did my employee get it in my office? Is this what we would call a workers' compensation claim? So workers' compensation on a high level is coverage that's actually legally mandated by the government that will pay for lost wages of an employee if they're injured on the job. So that could include sickness. Now, we don't really know how these policies are reacting that yet because there's a lot of questions. Did the employee contract the virus on the way to work? Did we make our employees come into the office for 1 or 2 days too long and they got it in the office? Was it simply an exposure just based off walking out the door? So there's a lot of questions around, can we possibly really tie how somebody could contract this virus to an office space or to their place of work? Right now, that's a little bit unclear. We're waiting to see if claims start to roll in on that front, how insurers will respond, how regulators would respond. Another employee-related coverage is employment practices liability. This is a policy that would protect the management of the company and the company itself in relation to lawsuits coming from employees. So a common lawsuit is accusations of wrongful termination or discrimination. So this could mean if there are mass layoffs, employees could claim that it was wrongful based on their sex, their race, lack of opportunity to move up in the company, et cetera. Now, like Michael said, unfortunately, we are seeing a lot of businesses faced with the reality that layoffs are kind of the next step at this point based on financial downturns and what the climate is around this virus. This is something to be mindful of. Now, aside from the coverage, there is something called the WARN Act. This is a federal regulation that would stipulate prior warning to mass layoffs. So each state has possibly has their own different version of this, although it is a federal regulation. For example, California has a 60-day prior notice period for any companies with 100 or more employees. So within most employment practice liability policies, there is commonly an exclusion around WARN Act violations. What we're seeing in California is that they're actually waiving the 60-day prior notice period right now. Now, that does not necessarily mean that your policy would cover a claim related to a WARN Act violation. If an employee or a group of employees decides to bring suit, you need to understand how your insurance policy would respond. Does it have that WARN Act exclusion? Is your state following suit with California about waiving the requirement for prior notice? These are things that you need to understand, speak to your broker about prior to considering layoffs if that's something you're doing. Again, as a reminder, similar to what Michael said, we are not attorneys. When making sure that you're complying with the WARN Act and understanding exactly how it applies to you in your state, speak to a good attorney, speak to good counsel. That's something that's very important to do when you're considering layoffs, but also understanding compliance. And then in turn, loop your insurance broker into the conversation if you have employment practices liability coverage. If you're thinking about getting employment practices liability coverage or in the process of applying, insurers are changing how they're looking at this right now. They're asking different questions on applications. Are you considering layoffs? That sort of thing. It's something that you need to be prepared that it might not be available. Many insurers are pulling out of the market right now in light of how frequent companies are laying their workforce off. So again, speak to your broker about the status of your application, have new questions come in, make sure you're communicating around that, because it could be valuable coverage if available to you in the event that, hopefully not, but in the event that you need to consider layoffs. Moving on to the next type of coverage would be more business operations related coverage. The first being directors and officers insurance. On a high level, this is coverage related to the management of the company. One of the most common lawsuits that D&O would respond to is from a shareholder. So especially in uncertain times right now when tough business decisions have to be made, it could lead to finger pointing at a time when shareholders are looking at shares, looking at the financial stability of the company, the financial strength of the company. If certain decisions are made that maybe shareholders disagree with, or maybe does unfortunately lead to a downturn financially, again, there could be finger pointing. If a shareholder lawsuit comes, the director and officer policy would be the one to address it. So again, in a time when tough business decisions need to be made and are being made, it's important to not only protect the company, but also protect yourself as a director or officer of the company. Ask your broker if you have this coverage in place. If you don't, insurers are still writing the policy. They're asking tougher questions around the financial strength of the company. That is a common piece of information that underwriters are looking at when they underwrite this policy, but it is something to think about when you're talking about making tough business decisions when you have shareholders in the picture. We've seen the first lawsuit related to COVID come through. We're still waiting to see how insurers respond. It was with a major cruise line where they directed their salespeople to mislead customers around the seriousness of COVID-19. This was probably about 3 or 4 weeks ago. Shareholders were worried about PR backlash when some of those emails leaked. They brought suit against the company. We're seeing how that plays out. It was the first notable one related to COVID. Just a little bit of an example of what to think about in terms of, hopefully nobody's doing that intentionally, but there could be unintentional, mistakes made in terms of decision making and that sort of thing. The next one is, again, the biggest hot button issue right now on the insurance front. We spoke about it a little bit earlier, business interruption coverage. Now, this coverage is part of a property policy. Typically, the coverage responds due to a physical loss of property. Think about a fire or something like that. Now, built into the policy is two endorsements or terms of the policy that you think could apply to something like COVID. One is civil authority coverage. This would be based on lost income due to the government essentially shutting your doors and not letting you occupy your space. Maybe your neighbor had a building and it's not, or had a fire in their building and it's not safe to occupy your space for a few weeks. You could lose income. The policy could address that. Another one would be suspension of operations. Maybe you're an e-commerce company selling a product and one of your manufacturers gets shut down. You can't receive a certain component that's vital to the sale of your product. If that shutdown was forced by the government for some reason and it has an impact on your business income, that could be an example of a suspension of operations claim with relation to business interruption. Now, like I said, most of these policies are going to have virus exclusion. So right now, insurers are not covering claims due to lost income. The virus is not causing property damage. That's not why the lost income is happening. But again, some states and likely more are trying to pass legislation to kind of force their hand. Now, a good case model in terms of what we might be seeing in the future around this would be when we think about 9/11 and terrorism coverage. Terrorism coverage did not exist on 9/11. Now, as a result, there was obviously a ton of insurance claims, especially around property in New York. now terrorism coverage is mandated to be included on those kinds of policies. We could be moving in a similar direction with COVID. With these state-specific regulation, there could be federal regulation as well, eventually moving into the future to make business income coverage in relation to a pandemic possible. This is not something that I think is close to happening, but considering the impact that 9/11 had on the insurance market and income of businesses, this is something that we could see happen. Our recommendation around business interruption coverage is that if you have the policy, and that would be property coverage with business interruption included, again, speak to your broker about this. File a claim if you think there's one to be filed. The insurance company will likely not pay it or decline the claim right now, but at least you are putting them on record and on notice, and it gives you an opportunity to proceed with that claim if any changes are made to coverage, similar to how terrorism coverage was implemented after 9/11. If you don't file a claim, nothing will be paid. The insurer will never respond. You have no chance. You need to put the carrier on notice, even if we think that they're not going to pay right now. So again, something to speak to your insurance broker about. That's my strongest recommendation at that time around this coverage. So again, moving on to other questions to ask your insurance broker. First and foremost, understand what coverage you have. If you have concerns about potential layoffs, if you have concerns about certain business decisions you've made, do you have management liability coverage in place? You need to understand that and the terms around it. You need to understand if you have that property coverage, is there the ability to file that business interruption claim? Again, if you're considering layoffs, EPL coverage, do you have that in place? Is it available right now? Business interruption, how do I report a claim? This is all stuff that your insurance broker can give you insight on and help you. They should be able to help you file a claim and go through that process with you. And then lastly, ask your insurance brokers about circling back to payments. This is something that insurance companies, including if your policy is financed through a third-party financer, this is something that insurance companies are much more willing to accommodate rather than coverage at this time. It could be difficult to pay premiums for certain levels of policy. We don't want to see coverage lapse. Insurers are on the same page on that front. If you don't ask, it's unlikely there's going to be any kind of relief for you. So talk to your insurance broker. There should not be pushback from either an insurer or possibly a finance company if you have a finance agreement in place for your premium. So that's a very important question to ask if you're looking for some kind of relief or deferment of payment. So that about wraps it up. If you have any questions, we have this Q&A as well. So I'll throw it to Adam to kind of kick things off on that front.
Thanks, Justin. Yeah, I have a question here for you regarding cyber insurance. So someone asked here, I know that cyber insurance policies sometimes offer business interruption coverage. Is there any coverage there, or is the focus on the government to potentially overturn the physical damage on property insurance stipulation?
It's a great question. And the focus is going to be on the government to overturn the physical damage stipulation on property, or negate that virus exclusion, or create a new coverage similar to the terrorism coverage with 9/11. Cyber insurance does commonly include business interruption coverage, but that is more so if you have to shut down business operations due to a data breach or hack. That is not a physical loss. The virus is not causing physical loss to your space, but it is causing a lot of companies the inability to access their space or sell their product. On the cyber front, that's not going to apply here. I don't anticipate that it ever will with regards to COVID. So the focus should be on your property policy on that sort of business interruption coverage.
Okay, great. And I have another insurance related one here for you, Justin. So Myra asks, if we're about to go through insurance renewal, what should we expect? What will be different in the context of COVID-19?
It really depends on what coverage you have. In my opinion, if you currently have employment practice liability coverage, be diligent in terms of new potential stipulations or endorsements or exclusions around layoffs. Insurance companies do have the right to change the terms of a policy at renewal. That's why they're mostly annual contracts. It gives them the ability to reevaluate things, both with your company specifically, but also with what's going on around the world in your industry, that sort of thing. So with an employment practice liability policy, if you have one in place that's up for renewal, make sure that there's no new exclusions or endorsements around layoffs, especially if that's something that your business is considering at this time. Your broker should be thoroughly going through the quote to see if there's any new exclusions or endorsements and going through that with you. On the directors and officers front, I would expect a little bit tougher questions regarding the financial strength of the company. Common information to send in is a balance sheet, P&L, your cap table. There might be new questions this year as opposed to last year. Maybe not stricter, maybe it might be more strict, but I would expect more questions to come in on that front and be prepared to kind of give a forecast of what you expect, although that's probably very difficult to put together right now. But be prepared to give some insight in terms of what you expect for the next 12 months for the business. Underwriters do understand it's nothing set in stone. These are just projections and forecasting, but something, especially with what's going on right now, they're going to want to understand.
Awesome, thanks. And guys, if you have any more questions, keep throwing them in the Q&A section there. Michael, I have one here for you. Can I apply for the PPP through my own bank? And can you explain more about the forgiveness portion?
Yeah, it's also a good question. So we're talking about the Paycheck Protection Program that under the CARES Act. And so can you apply for it through your own bank? I hate to give this answer, but it depends. You want to make sure that whoever you go through is an authorized SBA lender. So it depends on if your bank has experience doing this type of lending. I've heard that from some bankers that they're going to be able, even if they're not SBA lenders. But my recommendation would be to go with a bank that that has already, fulfilled SBA loans and helped with the application process. A good website is the SBA website. If you Google top 100 SBA lenders, it'll bring up all of the top SBA lenders throughout the country. Some of the more common banks that folks are familiar with, like Bank of America and Wells Fargo, are included on that list. And then there's other banks that aren't included on that list. And the SBA also maintains a list of who is an approved SBA lender. Again, the application process opens up tomorrow. So my recommendation, again, is to compile documentation and get that information into an SBA approved lender. Try to talk to folks today, lenders today or tomorrow, to get that application in. And we believe that even if you take one of these PPP loans out from an SBA approved bank, you can still bank with your existing bank. It shouldn't have any sort of implications there. And then lastly, in terms of the forgiveness portion, we don't have any direction yet. We're expecting to see some sort of paper or document that needs to be filed, possibly with the SBA, regarding what portion of the loan comes out to be forgiven. There are some calculators or rough calculators on the SBA as to how to calculate which portion of the loan would be forgiven, which portion would be needed to be paid back, and what the rates of the payback would be. And then I would imagine when you're filing your 2020 taxes next year, there will probably be some questions on there related to loans and any sort of loans, grants, money, anything like that. So we're telling folks to just be diligent in terms of your documentation, making sure that you have documents for everything that you take, and talking to a good CPA or a good accountant who can help you go through that process.
Awesome. Doesn't look like there's any more questions here at the moment. So I want to put just one thing to both of you. So I'll start with Michael. What are the kind of takeaways you think that people who've attended today, like what are a couple of action items that you'd recommend they do right away following this or in the immediate future?
Yeah, starting with me, I would say, outreach becomes super important. We've gotten through 2 weeks of work from home where a lot of workers and companies are still this mindset like this is something that's going to be short term, and it's looking like it may be midterm to long term. So documenting things, reaching out to people, making sure that you're talking to the right people, whether it's your banker, your accountant, your HR consultant, your lawyer, and just getting ready for the next phase of this new environment that we're in. 2 weeks behind us, or two plus weeks behind us, probably many more to go. So let's figure out a game plan and a strategy for how we approach the new environment.
Great. And Justin, yourself?
Yeah, I agree with that. Being prepared. When we speak about insurance, first and foremost, understand what insurance you have in place right now. Don't hesitate to reach out to your broker. That's why they're there. That's why their job exists. Frankly, insurance can get complicated. Talk to them, understand what you currently have, and give them updates on what you're doing. If you're considering layoffs, if you're making those tough business decisions, if you're unable to occupy your store or your office space, give them those updates. They might be able to provide insight and recommendations that you're not thinking about. So communication is key on that front. Regarding business interruption specifically, again, don't hesitate to file a claim. Right now, it might get declined. There could be new coverage in the future. You want that on record. You want the carrier on notice to give yourself the ability to proceed if coverage becomes available retroactively. To prepare for that, documentation, as Michael said, is extremely important on that front as well. Document any kind of records that you can about lost income or downturn in income. Document what's going on with your space, what is happening with employees. When you file insurance claims, there needs to be evidence of what's going on and why the claim is being filed. Keep those records diligently, have them on hand, talk to your insurance broker about what the best way to communicate or send that information is. Documentation is extremely important, but circle back, my most important recommendation, speak to your broker, understand what you have going on, take their recommendations. If insurance is available to help you during uncertain times like this, you're never going to know about it unless you understand what's going on. And try and stay up to date, use those resources. You can reach out to us. We can provide recommendations on where to look, on how to stay up to date with what's going on with regulations and insurance companies.
And just from a practical standpoint, I want to just mention, everyone says document. And what that actually looks like is pulling together a file, an electronic file complete with PDFs and screenshots before you need it, because we see a lot of clients, companies out there that, they file, they do something, and down the road, what happens is they're asked for supporting documentation, whether it's an application or whatever it is, and then they have to scramble to find out what that documentation looked like 6 months ago, 5 months ago, whatever it is. So I would say be proactive, pull together files, pull together PDFs. Again, in the electronic environment, that's what really matters, is having something on hand so that when someone asks for it, you can say, yep, here you go. It's attached to an email. It's becoming super important.
That's very useful, Michael. I think that just about wraps things up for today. Thanks so much, Michael, for your time. I know you put a lot of prep into this, and Justin as well. We will be putting together a couple of resources. I know we covered a lot today. So for everyone who's attended, we can follow up with an email with lots of links. Like anything we talked today, we'll point you in the right direction. And just one more reminder that once this is over, you'll get a link to the survey. Again, this is just for feedback for us so that we can do better webinars in the future. And also for everyone who does it, like, you're donating to a good cause. So I just want to remind everyone of that. And thanks, Emil, for attending, and hopefully we'll see you back here again on another Financial webinar. Cheers, guys.
Thanks, everybody.
Thank you.